Megan Horneman, Chief Investment Officer of Verdance Capital Advisors, joins us now. Megan, great to have you with us. I'm curious, if you're in the consensus of a better back half of 2023 for stocks, and whether or not the China sudden reopening changes the trajectory of that first half of the year at all.
So I think that, yes, the second half of the year is probably going to be a much better one than the first half. The first half is really going to be choppy. I think we're going to have to deal with the consumer. They're going to pull back as they're absorbing higher inflation and what the Fed has done this year. As far as China's reopening, it is an optimistic thing for the long run, but let's not forget that they're still struggling with a health crisis right now, and they are behind the curve in regards to where the rest of the developed world is as far as immunizations in that country. So I think it still is not a country I would invest in at this point. I think you'll see the first half still them trying to work out those quirks as far as reopening. It's good long term, but I'm not super optimistic there in the short term.
I guess I was asking in terms of the impact on U.S. corporations. I mean, we are just seeing the light at the end of the tunnel in terms of supply chain issues. And it feels like with these waves of COVID going on in China and no end in sight, at least at this point, that we could just be another lockdown of a port away from yet another snag.
And I don't disagree. That's something that we've been dealing with this entire calendar year, but yet we still have seen a significant improvement in the supply chain. So I think companies are finding other ways, other areas to fix that supply chain. And then don't forget, when it comes to the supply chain, the biggest impact there is just the slowdown of that buying, that pent-up demand buying, especially on the goods side, that I think will continue to improve the supply chain in 2023.
Are you making any moves going into next year in terms of tech stocks, or is it still too early with the 10-year yield seeming to levitate? I mean, we're up 40 basis points or so in the past 3 weeks or so, but we've got Apple sitting at a 52-week low. We've got Tesla down 69% this year, just to name a couple of the biggies.
Yeah, I think it's still way too early. We're in the camp that we think interest rates are still going to rise in 2023, not just obviously the Fed funds rate, that's a given, but also long-term interest rates. That's been a negative for those technology stocks. There will be an opportunity, I think, in 2023 to look at quality technology, but you got to be really careful. There still is some price discovery on what valuation multiple these companies warrant. And right now, I just don't think that that's very clear.